Thank you, and yeah, great to be here. Yeah, so I'm just going to talk to you about the results of the Dairy Farm Monitor project. If we can get this to go forward. So, yeah, so I work for New South Wales DPI, for those that aren't sure. I'm based down at Tokal in the Lower Hunter, but we run this project right across New South Wales every year. And we've been doing it for 8 years now, so we've got a really good continuous set of data now for 8 years. From most years we've had 32 farms. One year we only had 28, but most of the year we've had at least 32 farms doing the complete business analysis. So it's part of a national project. All the regions of Australia are doing Dairy Farm Monitor now, and the results are published through Dairy Australia through their website. And the data for from Dairy Farm Monitor farms goes into Dairybase. Now, Dairybase is the tool that any dairy farmer can use to analyse their business themselves, and then they can get a comparison report with data that's in Dairybase, so you can compare yourselves with other farms in New South Wales or other farms of a similar size. And the comparison data in there is the Dairy Farm Monitor data. So the benefits of doing Dairy Farm Monitor are that the data is collected independently. In this case, in New South Wales, we do it through DPI and a team of data collectors that go out onto the farms and sit with the farmer and get all the information. So it's a very rigorous process, I think, and pretty thorough. The farmers that are in it will tell you that it's, you know, a pretty big day's work to pull all the data together and get the results. So we're very meticulous about the data that we get and the way we do it, so that we're doing it the same in every region in Australia, so the data is comparable, you know, wherever you are. Dairy Australia co-funds the project with New South Wales DPI in New South Wales. So we've had a good partnership with them over the years. And I think the data helps in the improving the conversation about profitability in the industry, not just about production stuff. So about, are farmers making a profit? What's it costing them to produce milk? What's it cost in different regions? So it complements some of the activities, particularly that Dairy Australia have been running on farm business management courses for farmers, and there's a lot of resources now. So we're really trying to emphasise the importance for farmers to analyse their business at least once a year in this kind of a format, so that they've got a really good handle of what's going on in their business. Particularly in years like this, sometimes it's, you know, difficult to look at your business when times are tough and you know that you're not making a profit. But I think there's some lessons to be learned for how people manage through the tough times, and you know, really I think it's even more important to have a good handle on your business in the tough times than you know, in the good times. So now every year we really, it's a snapshot, I guess, of how the farmers that in our sample responded to all the conditions that were affecting them. You know, market forces, seasonal conditions, obviously, you know, cost of inputs. So we can actually quantify the effect of that. And now that we've got 8 years of data, we can see those trends over time, which I'll show you a little bit of in a minute. So it's used a lot, and as Michael can attest, the dairy industry's been quite scrutinised over the last few years, particularly the last 18 months or so, with parliamentary inquiries and ACCC inquiries, and you know, a lot of digging deeper into what's going on in the industry, rightly so. And so to have this data is quite invaluable to not only to government but also to farmer advocacy bodies and to the processors and to, you know, the farmers generally, to Dairy Australia, to Dairy New South Wales, to help them, you know, really know what's going on and to, you know, devise their strategies accordingly. So it is proving to be a really valuable source of information. So moving on to the results for 2018-19. So we're talking about the financial year that ended 30th of June, just gone. No need to tell everybody that it was bloody dry again. For some people, the third year, a very dry year. For some people, second year. So that's just a summary of the rainfall for the whole 12 months. And as you can see, you know, most of our dairying up and down the coast, there was only really kind of probably that Sydney lower south coast that did reasonably better in terms of rainfall, and Bega farmers down that area reasonably okay in rainfall, but particularly, and a little pocket there, but particularly North Coast and most of our inland valleys had a really dry year. Again, this is a combined drought indicator that DPI produces that you can see on DPI website. So it includes rainfall, but also temperature and soil moisture and that type of thing. So it just shows whether you're in drought or going into drought or coming out of drought or recovering. So pretty much 99% of New South Wales has been in drought for the whole period that we're talking about, and the northern tablelands and down into the Gloucester and Hunter particularly have been in quite intense drought for most of the time. Not telling you anything you don't know. So our 32 farms, they're spread pretty much across all of the dairying areas in New South Wales. So as you can see, we've kind of got all regions covered to make sure we get a good picture. When we publish the data, and you'll see on the sheet that I do split it into two groups, north and south, just to give us a bit of a regional cut on some of the data. And so north farms come down to this Hunter region and go up to the Queensland border, and the south farms, our first one starts down on the Southern Highlands and goes down to Bega and inland. And I also include the farmers that are in those inland valleys in the south group, mainly because their farming system is probably more similar to these guys than it is to these guys. Also, the influences on milk price are different in the northern half of the state and the southern half of the state. So that's really the reason. So it just gives us a little bit of an extra cut on the data.
So Kerry, going forward, will you mark Tamworth into the north, given that it's under Queensland pricing?
Well, no, I'm going to leave it in the south at this point in time, mainly because of that farm system effect. But it also kind of balances the numbers a little bit too, in terms of the size of the farmers in the group. But yeah, it's always a little bit tricky each year. But what I do is then split the north and south again. So particularly for the south, there's a lot of difference between the coastal farms and the inland farms. So I've actually cut the data again just to look at the averages for those 7 farms there and 7 farms on the inland. So, and in the north, I sort of cut it about here and look at these north coast farms versus these kind of mid-north coast Hunter farms. So I'll show you that data a little bit as we go along. So
how big are those 2 Tamworth farms?
They're fairly representative of farms in the district, I guess. So yeah, I don't kind of talk too much about details about individual farms, particularly in small areas, because the farms in the project are anonymous unless they choose themselves to say that they're in the project. So I don't kind of say whose farm's what. But yeah, they're.
Most farms around Tamworth around current cows, aren't they? So
yeah, there's some bigger farms. Yeah. But as far as the physical characteristics of the farms go, this might give you a bit of an idea. So we've got 32 farms, and the way it's cut this year is 17 in the north and 15 in the south. So you can see the average herd size across the whole 32 farms comes out at 373, but we've got a range from about, the smallest farm's about 100 cows, and our largest farm this year was about 900 cows. So we've got a big range. Bigger herds in the south than the north, and that's probably fairly typical of the industry. But and it's probably, the average of our farms is probably a bit bigger than the average of New South Wales farms. I'm not sure what that's up to now, Sheena, but it was probably around the 250 to 260 or something like that herd size if you averaged every farm in New South Wales. But so we are probably slightly bigger than average.
I think it's important to start talking about medians as well rather than averages. Yeah. Because we're getting a number of really big farms skewing this data.
Yeah.
Blowing out what that average is when we're talking about representing typical farms. So our milk solids per cow, 491
kilos of milk solids, and again a bit of a difference between regions. Same with farm size. We tend to have bigger farms in the south than the north in our sample. Homegrown feed as a percentage consumed, it was 60% statewide, which was pretty good, I thought, considering the year we've had and the difficulties in growing homegrown feed, but quite a difference between north and south this year. Labour efficiency cows per full-time equivalent is what we look at. And this doesn't vary a lot year on year. It's always around that 77 to 70 to 80. But again, the bigger farms tend to have more efficient use of labour, so more cows per labour unit and more production per labour unit. But that's kind of what our farms look like physically. I put this one up. It's difficult to see the numbers, I know, but it just shows you the methodology of how we do the farm monitor analysis. So we're doing a profit analysis, so we're not just looking at cash flow on a monthly basis and what's left at the end. So we're doing a profit analysis. So we take into account cash income and from milk and from livestock and other income other sales, but we also take into account livestock trading profits, so changes in inventory. And then we come up with our milk income, and our other farm income gives us gross farm income. So if we pulled and averaged all our 32 farms, this is what it would look like as an average. So gross farm income of about $1.5 million. Then we look at variable costs, which are the herd, shed and feed costs. And in feed costs, that's homegrown feed, purchased feed and inventory change if there is any. So if farmers are drawing down or accumulating fodder reserves, we capture that, we put a value on that and capture that as well.
Is the homegrown feed price representative what it actually costs, or is it just the pull-out figure?
No, it's actual all their costs divided by their fodder consumption for the year. So it's an actual cost for each farm. So that's an aggregated average there. So yeah, $868,000. So as everyone knows, feed costs are the real big costs on dairy farms. As you can see there, that's probably more than half of what the gross farm income goes on feed. Then we look at overhead costs, cash overheads, labour, repairs and maintenance, admin costs, insurances, all those things. Paid labour, that is, but we also put a value on imputed labour. So that's the value of the owner-operator or any unpaid labour that's in the business. So we take account of that. Oh, and depreciation. So we take account of the value of replacing machinery each year. So that gives us our main profit indicator, which is EBIT, or earnings before interest and tax. And so you'll hear me talk about EBIT a bit from here on in. So I just thought I'd outline how we get there. And as you can see, out of that $1.5 million, the EBIT this year was, on average, $53,000. So it was a pretty high cost year, but we made a positive EBIT as an average. Interest and lease costs come out of that then, and we have net farm income, so what's left after servicing the debt. As you can see, our interest and lease costs this year averaged $85,000, which actually left us in a negative position for after servicing debt, or left the average. We look at the assets and liabilities of each of the farms. So as you can see, with leased and owned assets, $7 million worth of assets, about $1.5 million of liabilities. So equity around about that 4.8 or 76%. That's dropped a little bit from last year, and the liabilities have gone up from last year. But it's the equity percentage has only really dropped a small amount, 1% or so. So whilst people are probably have had to borrow more money, both in long-term borrowings and also short-term borrowings for cash flow, overall the equity in our business, in the businesses here, is reasonably strong still. But return on assets is pretty low, 0.7%, and return on equity is negative this year after a negative net farm income. So that's just how the analysis flows, and just to emphasise that we're doing a profit calculation, not a cash flow calculation. So what are the big influences? I guess milk price has been going up. It went up 6%, and that is the second year that it's been going up. So it's heading in the right direction, farmers would say. So it was up. The average for the state was $7.74 a kilo of milk solids. And again, we've got the differential between the north and south. So the north was $8, a bit over $8, and the south was $7.37.
So when your milk price, Kerry, do you take into account the drought relief as well? Or is that
No, so that's not included. So those bits that came through as, you know, the retailer appeals and things, and the extra temporary levies that processors put on their wholesale price, they come in as other income. So that milk price is basically your contracted price from the processor. So those other bits and pieces came in as other income. And similarly with freight subsidies, with drought subsidies and other things like farm household allowance or charitable donations and that sort of thing, we didn't count them in farm income. So, and the freight rebates, we netted off the cost of freight. So I've got here the concentrate price, and that's jumped up quite considerably this year to, the average for the state was $567 a tonne dry matter, which is probably about, what, $5.20 or so, Neil, as fed. So yeah, and that's after we've netted off the rebates, where we could, so that's after rebates. But that includes things like minerals and additives and that type of thing. This year we've made much more of a conscious effort to include all those additives into the concentrate cost, whereas before we might have had them as another feed cost.
And your calf and your lead feeds will knock into that as well, Kerry?
Yeah, lead feeds and calf feeds come into that as well, yeah. Yep.
That's the expensive
Yeah, that's right. So we thought, well, they're all concentrates, so we need to look at the whole, you know, the cost of all the concentrates that are brought in to the farm, really. And, you know, including all the minerals too, is sort of it levels the playing field a little bit between people that are buying a pellet that's got everything pre-prepared versus buying grain and adding it in yourselves. So all of that now gets included in the dollars per tonne dry matter. Again, we've got a differential between north and south. It's usually about $40 a tonne, but this year the differential was only about $20 a tonne between north and south. So I think the south has increased a lot more relatively than what the north has this year. Purchased hay really jumped up too. So for the farmers that purchased hay, the average was $440.
The decrease between the two areas, would that be as a result of the freight rebates? Obviously, generally get freight to the north areas is more than what the southern farmers. So if the northern farmer is getting more per tonne off their freight cost, would that make any?
It could make a difference, but you know the cap was $40,000, I think, farmers. So you know most people hit that 40,000, and then everything above is non-rebated, if you like. So
No grain upstate, basically, and your north, south is skewed by your farms forms north as well, that have been buying up upstate. So it's either coming from Newcastle or south, so you've got much higher costs up there. So
yeah, yep.
Similarly, in the northern Dick, they've been buying the port, but also the southern suburbs have been buying the port. So there's big differences in cost to get the feed to the farm, and they've been exposed to a very different feed cost matrix than they've been able to buy from the farm next door. One of the normal characteristics of land farms is like the supply.
Yeah, it hasn't been there. So. And really, you know, that's probably been the biggest influence on profit this year, is that the cost of purchased feed, but also the cost of homegrown feed. And the cost of hay obviously has been really high, but the cost of homegrown feeds this year has been the highest in our 8 years as well. So, you know, I think that... Pardon?
If you won't grow, you've got to pour the water onto it, and you don't get as much off it.
Yeah, that's right. So included in that cost of homegrown feed is people purchasing temporary water. That counts as a feed cost. Also, extra power to pump. Probably people were irrigating, if they had irrigation, much more than usual because you haven't had those showers in between. And lower yields of your forage crops and that sort of things as well. Yeah. Yeah.
That's right. If you're lucky.
Yeah. So that's our calculated cost. You know, it's a little bit rubbery because it's a utilised tonne, but you know, I think it's as accurate as we can get about what it costs you to grow homegrown feed. And you know, the south really jumped up this year in terms of cost of homegrown feed, and you know, part of that was having to purchase temporary water for those farms that were in the water market. So, yeah, look, feed costs have been the big story this year. Milk price has gone up, but feed costs have gone up more than what the milk price went up, I guess, particularly in the south. North weren't affected as much, but the south farmers certainly, the feed costs outstripped the sort of increase in milk price quite considerably.
The big point there, though, is it's still in the year like this, it's still bloody cheap food too.
Yeah, it is, and the less you were, and the less you were exposed to the purchase feed market this year, obviously the much bigger impact it had on profit this year because of that really high cost.
Put more fertiliser on.
Sorry?
They just let put more fertiliser on it, was all.
The south farms?
Yeah.
Yeah, they. I think fertiliser use, well, I haven't analysed it, I think, is probably up this year because people were really trying to make the most of every drop of water that they had. So that probably contributed a little bit to the cost of homegrown feed going up. So, all of those things add up, and the pumping costs for irrigation obviously are quite significant.